All right, episode 38 of our derivative season. We got Dan from Pendle here. Talk a little bit more about Pendle. This is actually the last episode of this derivative season. TBD. Maybe we add one more, but I think this is the cherry on top for this season. It's been a fun season. We'll start with some intros, Dan. We talked a bit about your background. You're the growth lead at Pendle. You've been there for a while. Just give us some more insight about kind of how you came across crypto, how you joined Pendle, and some of the highlights from that timeline. You're
First
you're
stint.
you're on mute. Yep, you're good.
Can you guys hear me?
Yeah,
Okay, sounds good. Yeah, Pendle's actually my first stint in crypto. Before that, I was doing traditional finance. I actually joined Pendle. I discovered TN and yeah, found out about Pendle. I think my background of I was pretty familiar with blockchain already, how the infrastructure works, but I wasn't really into the DeFi space. And then I think I met TN, and then he was the one that introduced me to all of this crypto stuff. And then I figured that okay, it sounds interesting, and yeah, figured to joined Pendle and been pretty much with Pendle ever since the founding days. So I was part of Pendle since January of 2021, and Pendle eventually launched V1 in June of 2021, May, June around that time.
interesting. Before we get into kind of Pendle's journey, a little bit more about you. The show is called Exit Liquidity. We do a little segment where we like to hear a bit about maybe some of the moments that are engraved in your mind about your time as being Exit Liquidity.
My time as being exit liquidity, I was just liquidated during the curve dump with during the Michael Igor saga. Yeah, I was liquidated, and fun times. I would say fun
Interesting.
times.
Do you trade pretty often? Do you have any
No,
DeFi summer?
so I'm not I'm not a particularly good trader. I think the yield space is something that I'm much more familiar with,
Hmm.
and it is something that I'll stick to probably for the long run. But I do try and trade around here and there, but I mostly end up being other people's exit liquidity. Yeah.
It's an interesting one. I think that's the most recent exit liquidity moment we've heard on here. Usually people will have like some obscure like algo stable from like 2, 3 years ago that I've never heard of. But the curve stuff was like what, like
No,
two,
it's
three
very
months ago, I think.
yeah, it's
Yeah,
very 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 recent. Yeah,
still a
I
cold
was
war back there.
I'm personally a big fan of the curve ecosystem, so yeah, which is why I was even in that position in the first place. But then,
Yeah,
well, the whole unfortunate situation happened, so yeah, that happened.
yeah,
It's
that
pretty much
was
a
a
lesson
rough
learned,
time.
but yeah, I'll stick to yield trading instead of actual spot trading. It's definitely not my niche.
Mm, yeah, definitely makes sense. Cool. So shifting over like to Pendle a little bit, I feel like the project's been around quite a bit longer than most people realize. I think most people really only became, at least a lot of people that I know and myself, only became familiar probably like earlier this year, maybe late last year. But it was, you guys had a little bit of a run in 2021 as well, and markets obviously got quiet, but you kept building. What did Pendle kind of look like from day one? What did those early days look like? And what was the vision at that point, if it had changed at all between now and then?
Yeah, I think I can start with how the whole idea of Pendle started in the first place. So, we started the whole ideation phase started in 2020 during the food coin saga when you see 4 or 5 digit APYs. And then we were thinking because these yields are fleeting, you either hop into a hype yield train in day one and farm that juicy high yields, and and the yield's gonna drop in the next couple of days, and you move on to the next farm, or you end up being exit liquidity. So we were thinking is there any way for us to lock in these rates on chain? And then we figured that okay, it's not possible yet, and then we start going to the drawing board and see like how do we make this possible. Thing the And then we started looking into inspirations from just traditional finance in general. And then yeah, it's very easy to discover that interest rate swaps are a pretty common thing, but you don't see it in DeFi yet, even though it's such a uh, important piece of financial tools, I would say, to have a mature financial ecosystem. So yeah, we decided to draw inspiration from that, and then figure out how to retrofit that model on chain, and then that's what we did to Pendle V1. The whole idea is that you can split away the yield away from any yield bearing asset, similar to how in traditional finance you can strip a coupon away from a bond, a dividend away from a stock, or the rental yield away from a house. Same extended idea to crypto. Strip away that yield away, and you trade these two tokens separately. That by in turn you can achieve either yield trading by trading the yield portion, or you can get a fixed yield, which is the principal portion, which is equivalent to a zero coupon bond of any assets. So yeah, that's how the whole idea started. That's how Pendle V1 got started, and then yeah, we launched with quite a couple of assets that were interesting. And to your point, yeah, I do agree that our kind of popularity got better in the last couple of months. How we design Pendle V2, and yeah, this Pendle V1 had its limitations. We went back to a drawing board and design Pendle V2 from scratch and see what can be improved. And then yeah, Pendle V2 launched November last year, and here we are today.
Was there, when you guys first launched, was there like a market for this kind of thing? Where did you have competitors? Because now, obviously, I think there's other projects who are attempting to do yield trading or have been attempting to do yield trading or having locked in fixed rate yield. But back then, I mean, as far as I know, it was mostly unheard of, right?
I wouldn't say it's mostly unheard of. I think there were a few protocols around already. It was, I would say, one of the more popular genres for VC raises in 2021. We've had a few people attempting the same thing, yield tokenization and also yield trading. There were also others doing the different kind of interest rate swap models, similar to how you can think of doing like perpetuals on rates. There were a few of them, but I think some of them are still around. Some of them pivoted, but yeah, I would say it's a pretty challenging market to grow right now. But yeah, I don't think we are the only one. We're one of the first movers for sure. But yeah, we were definitely not the only one doing the interest rate swap model in crypto.
Yeah, and I think being the growth lead on the team and being there for from the beginning, how is like your strategy shifted? Um, I think when it comes to a new protocol, there's different hype cycles, and then I think you guys hit a point where you found really strong PMF, and you were able to kind of leverage a product that not many people were used to, and kind of give them a reason to use it. What was the conversation or like a strategy shift that you felt like was the most important to kind of bring Pendle to where it is now?
I wouldn't say there's a big strategy shift there. I say it's more of like timing your market right. Also don't spend unnecessary marketing efforts when your product is not ready for it. Looking back, well, Pendle V1 I think should be called the Pendle Beta, just because of how much stuff can be improved from V1 to V2 and how much we actually improved from V1 to V2. So for a good part of 2022, we were very very quiet in terms of marketing. For us, what we did was we treasured these few community members that were laying around in our Discord, and constantly updating them. Hey, we're still around. The silence in social media was actually intentional, and we were, you know, not looking to spend much unnecessary marketing expenses when the product's not ready yet. So we're building V2 for the most of 2022. And yeah, I think once Pendle V2 launched, I feel like the product is sort of ready with a whole suite of technical upgrades, like having concentrated liquidity, combining liquidity from the principal side and the yield side, and introducing a new tokenomics system, Pendle. It's a bunch of whole suites of upgrades. And then I figured that, okay, now that we have the product ready, we've invested heavily in our engineering stack. It's time to double down on our marketing efforts, and that was when we start pushing more content on social media, getting more presence, in general. And because I think the product is already ready, we grew alongside the amount of marketing that we push. But I think that's also because the product was pretty much ready already. And to your words, I don't think we are at PMF yet. I don't think we're even close to it. But yeah, it's good to see that we're seeing the traction that we are seeing right now.
And before we dive into like technicals and the intricacies of Pendle, could you give us just a high level overview of what Pendle is and
Sure.
why you think it's important?
Yeah, so Pendle, in essence, is a yield trading protocol. At a high level, what you can do on Pendle is either you can get fixed yield or you can lever up your yield exposure. The whole point here is that you have control over the yield of any assets that Pendle supports. The goal here is to let you have control of your yield. So if you think that the yield of a particular asset, for example, STE is going to go up, you can buy that yield position. Or if you think that the yield of um, an asset is going down, like for example GLP, and you can lock in that rates early on. So just for example, GLP rates currently is at 3% this week, and we've seen people locking in rates of 20% a couple of months ago on Pendle. And since GLP value, I would say, is pretty stable, I think that's a very good deal for them to have locked that. I think in a nutshell, yeah, Pendle's a yield trading protocol for you to manage your own yields.
And do you guys have a good idea of like who your bigger traders are? Because I think for when it comes to like perps, it's something that most people have touched in one way or another, being in crypto. And obviously there's more savvy traders out there. But given that this is like a new product, I'd imagine that like the trader base you have is like pretty niche and just now emerging.
Yeah, I think niche would be a right word to pick here. So we do look into the wallets that use Pendle. So in terms of user base, we have, I think, a pretty diverse user base. For people who provide liquidity are pretty diverse. You have wallets from institutions, wallets to sophisticated traders, to your average Joe on crypto. So we have two UIs. Just because of how complicated the product is, we have Pendle Trade. That's where you do all the full suite of yield stuff on Pendle. And I figured that requires a pretty significant education for users to understand how it works. So we created a second UI called Pendle Earn. They run on the exact same contracts, but the whole idea for Pendle Earn is that it's a UX can go in and just earn fixed yield or provide liquidity to stack more yield on top of your yield bearing asset. So we have different user base here. The bulk of our funds come from Pendle Trade. Addresses actually use Pendle Earn. So I think we can see the dynamic here play out as we envisioned when we created these two UIs. So to your question, the bulk of our users are sophisticated users. At least the bulk of money that is flowing around. I would say about 25% are confirmed to be institution wallets, and we are looking we're looking at higher institution wallets actually, because I don't think most of the addresses for institutions are doxed. So I would say a pretty sizable chunk of our TVL and liquidity actually comes from institutions. 25% are the addresses that we know for sure are from institutions. And beyond that, from the other wallets that we see, the general trend is that these people have used other complex DeFi protocols before. So I would say these users are pretty DeFi savvy already and know what the hell is going on. And yeah, I think that's the general audience, general audience in Pendle, for those who yield trade. But for those who provide liquidity, it generally comes from everywhere.
You alluded to Pendle Earn there for a second. I
Yep.
think that was pretty big news when it first dropped. But as far as I understand it, it's just a much more friendly UI for providing liquidity on Pendle, and I believe the intended goal is for that to be more of like an institutional product, like almost like a CFI type project or like a DeFi type project for CFI institutions. What's is that first of all, is that correct? And second of all, like what makes it what makes it so special? Like taking that simple UX, how are you going to be able to ship that then to, institutions, or like who would be the intended audience there in the long run?
I think there are two. Okay, so just like to your first question, is that correct? Yes. Yes, partly. So it's not only where we get our liquidity from. So there are two things you can do on Pendle Earn. You can get fixed yield, which on Pendle Trade is equivalent to buying the principal position of a yield bearing asset. So you're getting fixed yield for that asset, or you can provide liquidity, which is taking your yield bearing asset, put it on Pendle. Like for example, you have ST park it on Pendle and use that to provide liquidity. So you're earning more yield on top of the yield that you're already earning from ST. And the other one will be either getting fixed yield with your ST or any other asset that you want. So those are the two things. Now, the thing is, the idea of buying a principal position to obtain fixed yield doesn't really make sense for most users out there. Whereas creating an interface that looks like a vault where you can earn fixed yield makes much more sense. Even though behind the scenes they run the exact same contract, what you're doing is actually buying a principal token position, but you just don't have to know that. So that was the whole idea for Pendle Earn. But then that's on the surface level, but on a deeper level, why we decided to go for Pendle Earn was when internally when we were pitching for centralized parties to use Pendle as a way for them to provide fixed yield. It was very difficult for us to explain again that principal position and how everything functions on Pendle. But then we realized that we can just mention that we have an earn product where everything's on chain. You can verify it, and the yield sources are clear. And because it's done on chain, our yields are natively higher than what the centralized parties can provide. Why don't you guys use our platform to provide fixed yield for the users? You can maybe take a little bit of spread on top. It's similar to how I think it was Gemini that was using Celsius as a way to provide yield for Gemini Earn, but then Celsius blew up. And also they're not a DeFi product, so you don't really know what they're doing with the funds behind the scenes. Whereas for Pendle, everything's on chain. And we figured that and we say Pendle Earn has a natively higher yield and we're on DeFi. It was a pretty no-brainer way for us to explain things. And we figured that if institutions can catch that idea better, it will be a no-brainer for retailers to catch that idea as well. So we decided, let's experiment on it, build a whole new UI from scratch. They run the exact same contract anyway, and try it out. Yeah, and then now we actually see that playing out. The bulk of money flowing in is still through Pendle Trade. Those are the complex users, and obviously people who are more sophisticated have more money. But most of the addresses that interact with Pendle contracts are still from Pendle Earn, and those are from I would say, the smaller money, people who are not as sophisticated.
For the less sophisticated folks, how do you kind of feel the pipeline is from kind of the understanding point of view? How high do you think that barrier to entry is for someone to become a complex trader, aside from capital? And are you guys thinking about kind of contributing to like some kind of program that is education based?
Yeah, so I think to get users, usually there are two fronts for I mean, I'll say three fronts for you to think of. First one is the product front. Your product has to be good enough to attract users, and there's something that appeals to users for them to come. The second is your UX, your UI UX. This is where Pendle Earn comes in. Having a simple UX means people don't have to go through your docs to understand what you're doing, to be able to use your product. And to your point, what is the barrier here to from an average Joe to a sophisticated trader on Pendle? Honestly, I don't think it's that high. What they need to do is really go through our education materials, which is the third point that I mentioned. But I would say most people are not willing to take that first step to look into your docs and to really understand how your protocol works. So if you just, even no matter how good your education stack is, if your UX just doesn't cater to the people who are not willing to learn, you are shunning away a big part of crypto users out there. So yeah, I think by creating this, simple UI, it really attracts all these, I would say, more people who are not willing to learn more about your protocol, and they can still use your protocol. And I think that's a pretty sizable chunk of them out there. Also, that also enables them to take the first step into a protocol. And once they realize that they can earn something, and there's something they can do in your protocol, that also encourage them to learn a little bit more about your protocol. And that's where you have all your education stack prepared. Now, we also put a lot of emphasis on our education materials. So if you go to our app.pendle Finance, on the trade page, you can toggle from earn to trade. On the top right corner, there's an education tab in the app itself. So we do focus a lot on education, and within the education tab, there's an in-app learn. So what is basically is you just learn in-app. So we have 3 education sources right now: the docs, which talks about how the protocol works; the learn in app, which basically learn how to trade yield in the app; and a yield trading handbook, which is to learn how to trade yield. Because I mean, I think you guys have that experience as well. When you trade on perps, you don't necessarily have to know how the perp protocol works, but you just need to know how perps work to be able to trade in a perp protocol. You don't necessarily have to know how, for example, GMX and GLP works versus how DYDX settlement trades. Just have to know how perps work to be able to trade. On Pendle, I feel like the same thing. You don't really have to know how Pendle works to be able to trade yield, which is why we separate our education stack to like how to trade yield. If you want to know about how the protocol works, go to the docs. This is how the protocol works. But yeah, we do invest quite heavily on our education stack, and we're still growing our educational resources. And yeah, that's our way of converting users to be a sophisticated trader. But if they're not willing to, I think it's fine as well. They can just interact with the contracts with a simple UI.
Yeah, I think Ollie has used Pendle and yield trading in general a lot more than I have. I honestly still haven't made that leap yet. I don't know. I haven't felt the
What are you waiting
exact
for?
need to. I do want to hear more about how it works. So from a high level, could you break down the tokens, the separation between the yield and the principal, and then how that kind of routes through the AMM entirely, all in one pool? Just kind of how that works and how you guys thought
Sure.
about developing that.
Yep. It's gonna take a while
That's
for me
fine.
to explain everything.
We'll jump in
Sure.
every now and then.
Sure. Yeah, if there's anything needs clarification, do feel free to interrupt me. But I think I'll use analogies to make things simpler. I like to use rental position as an example. So what Pendle does is we are a yield trading protocol, but the first step, there are 2 parts to it: how to facilitate the trades, and first of all, how to tokenize the yields. So first part, yield tokenization; second part, yield trading. Yield tokenization is a process of splitting the yield away from a yield bearing asset. So for example, STETH, who has the right to hold the principal part of STETH, and who has the right to receive the yield part of STETH. An example will be if you own a house. So if you want like a rental property, for example, if you own a house, you own a house, and you have the right to receive the rental yield of that property. What Pendle does is basically we separate the two. You can own the house, but someone else can have the right to receive the rental yield, and these 2 positions are tradable. That's the whole gist of it. So the first part is tokenization. We're splitting the yield away from a yield-bearing asset. And the second part is yield trading, where you can trade the yields of these yield-bearing assets after separating them.
How does
Now,
the exact how does that work on a token level? What are you using specific ERCs, or is there a true separation happening at the protocol
yeah,
level, or is it all paper?
so on the contract level, what happens is a token is a yield bearing token, but the thing is, okay, we have this token called SY, or standardized yield for short. This is basically a wrap version of any yield bearing assets out there. So you can think of it, so like STETH generates yield in a rebasing way. So imagine 1 STETH next year becomes 1.2 STETH in your wallet, and after a while becomes 1.3 STETH in your wallet, etc. And then there are some non-rebasing model for yield generation, and there are also other forms of yield generation where there's no tokens, etc. There's a lot of, because yield generation token models in crypto are not standardized. So the thing is, Pendle, we work with yield generating tokens, and because they're not standardized, it's pretty difficult for us to support these assets. So what we did was let's create a token standard that can wrap any type of yield bearing asset into the standard. Now that's psi. That's the first one. So any yield bearing assets, we wrap it into psi first, standardized yield. So STE turn to psi STE. SDI turn to psi SDI GLP to psi GLP. You get a point. Now that's the first part. Size are because this is standardized now. Our yield tokenization model can work on any kind of psi. Now the whole point here is to split away the yield away from that yield bearing asset. What happens is we hold that psi in the contract. So we hold that yield bearing asset in a contract, and any new yield that streams to this token goes to YT holders. Now this psi is split into two tokens, a PT, a principal token, and a YT, a yield token. As the name suggests, the principal token holds the principal of the asset, and the YT have to receive the yield of that asset. Now, because Pendle already holds the psi, tokenizing it means that the YT holders will receive the yield streams of the psi tokens, and PT holders have the right to redeem the psi that's being held by Pendle at maturity. So that's roughly how the yield tokenization part works in a more technical layman way of explaining.
And how does that kind of how is the AMM set up for like routing all of that?
Yeah, so the AMM supports the trading of PT. Now, there's no YT AMM. I'll get to that again. How YT trades happen, but all trades are PT trades. Now, the PT is paired against its underlying. So, for example, PT STE is traded against STE. So if you provide liquidity on Pendle, you're providing a PTSD position against STE position. So both of these assets are yield bearing. So by default, even if there's no fees and no incentives, providing liquidity on Pendle, you'll still earn yield because the assets you're providing on Pendle earn yield. On top of that, you're also earning swap fees on Pendle. So you're earning more yield on top of that. And we also have incentives to top it off. So you're earning 4 different sources of yield if you provide liquidity on Pendle. So that's how we facilitate trades for PT swaps on Pendle. Now, because PT is traded against its own underlying asset, trading might seem a little bit difficult. So, for example, if you want to buy, one PT GLP, you want to get a fixed yield in GLP. You don't necessarily have to have GLP ready to be able to trade on Pendle. So what we did was we created this function called Zap, which means you can buy PT or provide liquidity with any assets that you hold. We just route it through 1inch to the required assets, and we'll just LP it for you. So yeah, it's basically zapping in, routing your input asset to the required assets on Pendle. Yeah, so that's the first part on how we facilitate trades on our AMM. And the second part is how do you trade a YT on Pendle if there's no YT AMM? Now, remember that a PT and YT are minted from the same token. So, for example, one STETH mints PT and YT, which also means that the sum of PT and YT is equals to one STETH, in a sense. Which means that if PT price goes up, YT price goes down. If YT price goes up, PT price goes down. They're both the two sides of the same coin because they both sum up to the same asset. Which also means that if you're buying one YT, what I can do is I can take an STETH, I mint PTYT, I sell the PT away, and you're also holding YT eventually. So, which means that buying YT is equivalent to selling PT, selling YT is equivalent to buying PT. And I figured that, okay, that's possible, and then we basically help you route all the transactions through the AMM, which means that both PT YT trade on the same pool for a given asset. So it enables less liquidity fragmentation. You don't have to have a YT AMM, and you also don't have to have another PT AMM to be able to trade these two assets. I think that's the gist of how the AMM works.
I see. And then some of the features on the trading side. Again, I'll preface by I haven't yield traded before. Are there certain aspects that like consumers or users are demanding, or are people like itching for margin leverage? Are those aspects that you guys have incorporated?
Yeah, but I think well, margin leverage is something that we're looking at right now. But I think to enable leverage, you need to have a pretty deep liquidity already to be able to sustain a leverage trade on Pendle. But buying a yield position in the first place is already a leverage position. So I think analogy is a better way to put it here. Let's say a house costs $1 million, and then you can tokenize it to PT and YT. Let's say the rental yield of the house is worth $100,000. I mean, obviously, the rental yield of a house can be a bigger portion of the house's value, right? And if you know that the rental yield is going to go up in the next 5 years, and you don't have money to buy a house, what can you do? Well, you can't just buy a house to be able to anticipate rental yield going up. What you can do instead, you can buy that rental position. Now, note that, right, like I explained previously, the rental position is only a small portion of the house's value. And if you know for a fact that rental yield is going to go up, you can stack up a lot on that rental yield position, which means with the same amount of capital, you can buy a much bigger portion of the rental position than if you just buy the house, which also means that of in Pendle is already levering up your exposure of the yield bearing assets. Extend that the same idea for ST, for example. The yield position for one ST probably costs like a couple $100. And then, if you know for a fact that ST yield is going to go up in the next couple of months, a couple of years, you can buy a hell ton of the yield position for ST instead of
Did we lose him?
Yeah, I think so. It was going in and out, but it has stopped.
Dan, can you hear us?
hello.
Yes,
Yeah,
you're back.
that's better now. You can rewind like 20 seconds there.
Oh, okay. I was just closing anyway. But it's like buying the yield position of a yield bearing asset is already levering up your yield position anyway.
I
So
see.
there's already a leverage in its own.
Interesting.
Gotcha. I think at least when I first came across Pendle, and I think I have a better idea now, but I feel like some people probably still struggle with this. The challenge is kind of, or at least the challenge for me was figuring out when something like this would be useful. So the few times I have used Pendle, it's been based off of some catalyst that is usually pretty obvious just because it's still a small market. I think the information asymmetry is still like pretty big. Like for example, a new LSD launches and they have, like 2% APR because they can't clear through their validator queue. That's like, in almost every case that's happened, they've been able to recover to 4.5%, whatever. So that's a pretty easy long. Or like GLP, like that being wound down eventually for V2. That's a pretty easy like PT play that someone could make. Do you see this as like something that will mostly be catalyst based trading, or do you think that this can be more of like, because people will trade perps on any given day, like regardless of what is in the news, I think. Do you think that the same could be said for yield trading?
Yes, if liquidity is deep enough, I think people speculate on any assets that's possible. There's no reason why you won't speculate on yield the same way as you would speculate on the spot market. But just because the liquidity is not deep enough in Pendle, people don't really do that yet. But once liquidity is deep enough, because liquidity is not deep enough, it's still very much catalyst based right now because you have to take that price impact into account to be able to justify the risk of not being able to exit in case your hypothesis is not right. But I think to your point, I think it makes a lot of sense that people are trading in Pendle because they know certain catalyst is coming and because of information asymmetry, and then they can take actions before others. And I feel like that in itself is a very strong use case because the yield percentage in general are much more predictable than price. We know for a fact that GLP is going to go down because they're migrating to V2. Now, that is a very easy decision for you to lock in the rates on Pendle back then when it was like 20%. It's a very easy 20% yield on a pretty stable asset. Same thing for LSDs, like what you mentioned. Like back then, Swell ETH validator queue was so long and the underlying yield for Swell ETH is pretty low. But then a lot of people saw that coming, that they're gonna, enable a lot of the validator queues, and then the yield's gonna jump up, and then a lot of people were racking up on YT, and we can already see that, like people jumping into the Swell ETH train on Pendle. then you can also use that as kind of like an indicator on what's coming for the underlying asset. I don't think it's a strange concept in TradFi. The bond market pretty much shaped the yield curve, which shape your idea on how the general public consensus is on the yield markets in the next couple of years. And that's something that we are looking to build, because if you can see the general public sentiment on the yield movements of a given asset, shows it shows some information that the public know that you might not know on that asset. And yeah, I think the end goal is definitely to create like this healthy yield curve on any given assets on in crypto.
Right. That makes sense. I'm hoping I can pull up your trading UI real quick, and you can just
Sure.
like walk us through some of the different stuff that's going on there. Because I think for some people it can definitely be difficult to kind of wrap your head around.
Sure.
While
That's
while
the
he's
right
doing
one.
that, I was gonna ask about. Oh, he's quick with it. I'll let him go with this.
Yeah. So this is GLP. This is the APY for the yield token of GLP. Given that so there's the PT and the YT. Let's look at this first. The things that jump out to me here are, number one, the long yield APY is negative
Yep.
90%. Why is that the case?
So okay, let me move you to my main screen a little bit because it's a little bit tiny.
Sure.
I won't be looking straight into the camera in this way though, but yeah. So in this case, it might be a little bit confusing, but there are lots of APYs on your screen right now. There's the underlying APY, there's implied APY, and there's the long yield APY. Actually, there's also the fixed APY. But I think if it's okay for you, I think can you go back to the market page?
Yeah.
Instead of this page, and then on beside the active and mature toggle, do you see that 4 square right there? Yes, just click on that. I think this is a better view for GLP. Now, note that you have 4 different APYs here: underlying, implied, long yield, and fixed APY. Might not make sense, but I'll run through them a little bit, and then it'll start to make sense why the long yield APY is very much negative right now. So, underlying APY is the APY that GLP is producing at the moment. So if you go to the GLP page, that's the underlying APY that they're giving out for GLP. Implied APY, on the other hand, is the price of YT given in yield terms. So back to the rental yield example that I was mentioning just now. Let's say a house costs $1 million, and the yield position costs the yield position for the next 1 year costs $100,000, and the principal position costs $900,000. With that number in mind, what do you think the rental yield of the market is? So right now, YT is about 10% of the overall house's value, and which means the market is implying that the cost of the yield of this house is about 10% of the house's price. So the implied APY here is basically the price of the yield that the market, the price of the yield that the market is pricing it at. And now, if the market is pricing this yield at 9%, while it is giving out 2.9%, you're basically losing money because you're paying to get 9% of yield, but you're actually getting a 3% yield instead. Now, that how much money you're losing is long yield APY. On the other hand, if you look at, for example, HLP, just besides GLP, the implied APY is lower than the underlying APY. You are paying to get you're paying the implied APY while you're receiving the underlying APY. Now, because you're receiving more than what you're paying for, that number, we simplify it for you, is the long yield APY, which in this case would be very much positive. Now you can see the numbers range is pretty insane, which also means that there's a big opportunity here if you know what you're doing and when you buy the yield position of a yield bearing asset. So yeah, so that's first part, long yield APY. And the fixed APY is just is mathematically equivalent to implied APY because of the definition, and that's basically the fixed yield position, just we're buying PT position of an asset. So that's the 4 different APYs that you get on Pendle. So the negative here is because the yield position is very expensive. but you're not getting much yield. In this case here, GLP buying, well, NFA, but buying the fixed APY position will be a good play here.
And then what about the price for either the YT or the PT? Because I remember in one of the trades I made on here was a long yield play, and I was, just going into it pretty blindly. I was expecting that as the yield went up for, let's say, for HLP, let's say the yield goes up by quite a bit, I was expecting the price of the YT to also follow because it's entitled to a greater portion of yield. Is that not necessarily the case, or what does the price represent for
No,
a yield
the
token?
price is independent of the yield position. The price depends on what the market thinks. Of course, if there's no trade that happened, YT price will just decline over time because there are less and less yield to accrue over time. Assuming that if the underlying yield shoots up, let's say GLP underlying yield shoots up to 100%, all of a sudden the next day, and long yield APY basically goes to 1,000% in that case. You won't necessarily see YT price going up, even though the yield receivable for that asset is so much larger, because the market, it depends on the market. But usually, if market expecting GLP yield is going to go up, the implied yield for GLP is going to shoot up as well, which in turn causes the YT price to go up. So if you kindly click the YT part for GLP,
It's HLP.
GLP,
My bad.
no worries.
Uh,
You go to the 1 week chart.
Sorry, a week.
Oh yeah, I think this is a bit hard to see because weekly, I was trying to fix the chart here. But you can see that the blue line, the implied APY, has been steadily dropping because people know that people are expecting that the yield is gonna drop. So the implied APY, which in turn causes YT price to drop as well, which means basically saying that the market is implying that GLP yield is gonna fall, and it has been falling, but it hasn't been falling as fast as underlying APY has been falling. So I think that's part of market inefficiencies as well.
Okay. Yeah, I think that definitely helps, at least my understanding. And then just last thing down here, this is specifically for yield trading, I believe, or for trading YT. It's kind of like projections based off of what
Yes.
the APY might be in the future.
Yes.
Is that correct?
Well, yeah. In this case, everything will be negative just because of you're basically receiving less
Right.
yield than what you're paying for GLP's case, because the yield is so expensive. But I think the numbers will make more sense if you go to other assets. I think going to Ethereum, you can see some more assets that make a lot of sense.
Ethereum as in like
On Ethereum
mainnet, or
chain.
going to Ethereum
Yeah,
based
Ethereum
assets?
mainnet,
Oh,
sorry.
okay.
Yeah, I think
Let's take a look at
you'll
that real
start to
quick.
see.
Probably
So,
would
for
be a good one.
example, yeah, just the SDI pool, for example, from Spot Protocol, any of the maturities, yeah, you can see that the long yield APY is a pretty decent long yield APY on a given asset. And if you think that the yield from Spark Protocol is not gonna drop below 5% over, let's say, until maturity, you're basically locking in that rate because the yield that Spark Protocol is giving is constant at 5%. And you can actually monitor this actually. So the DSR is not the die savings rate is not gonna drop until the utilization ratio goes to a certain percentage, and it has to drop a lot ever since they dropped the yield from 8% to 5%. And I doubt it's gonna increase to. I doubt the utilization ratio is gonna increase just because of the expected S stable coins like SFREX and all the other stable coins that are coming up. They're going to be offering higher yield than SDI. So SDI yield is going to stay here for quite a while.
That's some very, very constant yield.
Yeah. So people have been speculating on it. So the thing is, after 5%, it drops to 3.3%. So kind of like a battle between, do you think the yield's going to be at 5%, so you buy the long yield position? But some people think, okay, it's going to drop to 3.3%, so might as well just lock it at 3.9% right now. Why not? So yeah, so it's why you see the implied APY is fluctuating up and down within the same band of range, even though we have a pretty decent volume in this pool.
It's a very interesting dynamic. And what kind of, do you have an idea of what kind of volume you generally see in a given pool? because it looks
And a
like
given
this was like a
pool,
daily spike.
Yeah,
given
so
the plus
there was a
200%.
day spike there, but I would say the volume from Pendle is not really that consistent. It's you usually see very high volume in a pool when there's a big catalyst known coming. So, for example, every
Mhm.
Wednesday, the GLP market updates their yield, and that's when you see people
Mm,
start speculating, oh, where's the yield's gonna go? But
yeah.
our daily trading volume has been around a mil to 1.5 mil. But yeah, but it usually comes from the different assets that we provide. So
Mm.
yeah, you can see there's some pretty crazy numbers in Pendle, like for example, OETH, long yield ETH has 66%
Mm.
on NLC. So
Yeah.
yeah.
Great. Thanks for that. That actually helped a lot. So I don't know if that brought up any extra questions for you there, because I think that's your first time like walking through that.
Yeah, my question there only was kind of going from idea, like a trade idea,
Yep.
to execution. If I think that Ethereum is going to go up, I hop onto a perps platform. I have USDC. I just press long, and it happens. When you have an idea, like for instance, Ali, if you want to give the background on your swell yield play, when you go from that idea to execution, uh, could you explain the different parts? Because when you were on the GLP one, there were two different pieces, I think, with the two different tokens the token split you were referring to earlier. How, like, why isn't it just that you can do just like perps, where it's just you hop in with USDC and all
Because
of that happens on the background?
Because they are both represented by two different tokens. We can technically show an interface that just lets you long or short the yield. We can, but I wouldn't say that breaks the UX, but that limits the that's one use case of Pendle. We can technically create a UI that does exactly what you said, but I think fundamentally how it works is they're represented by these two different tokens. I
It
think a big
helps
part
the
of it is also
complex trades.
Pendle earn. Yeah.
Okay, I see. That was my only question there. Other than that, I think the UI looks really
Yeah,
really
but I
nice.
think beyond that, like to your question, like I don't think it's that hard. So if you think like again to like what you do, and if you think ETH is gonna go up, you go to press long. Same thing on Pendle, but instead of pressing long, if you think yield's gonna go up, you buy the yield position. Simple as that. If you think yield gonna go down, you sell the yield position. Or if you don't have any position on Pendle, you buy the principal position, which basically means you're locking that yield away. So the idea is there. I mean, we can create a third UI to make a perp like experience, but I think fundamentally again they still run on the same assets and the same contracts anyway.
Yeah, and there was also an Pendle pool. Can you explain the relationship there? I think that's Magpie. I can't remember
Yes.
the exact thing. And just go in depth a bit about your tokenomics as well. We haven't touched on that yet.
I think those are two very separate part. Yeah. So my B of like this is kind of like a sort of like an sort of like a token incest kind of thing, where we support our own tokens, tokenomics, our lock version of our token on our own protocol. But yeah, okay. So tokenomics of Pendle is VE Pendle. It's similar to how VE curve functions with a little bit of caveats. For just for the listeners here who don't really know how VE curve works, the point here is that when you lock, for same thing as Pendle, when you lock Pendle for VE Pendle, when you lock Pendle on Pendle, you get a VE Pendle, which is called vol escrow Pendle. The longer you lock, the more VE Pendle you get, and the more you lock, the more VE Pendle you get. Now, a VE Pendle entitles you to three things: boosting your LP position, which means if you're an LP and you hold VE Pendle, you can boost your incentives up to 2.5 times. That's the first one. Second one is you get entitled to protocol revenue, so it's kind of like a dividend share policy. The third one would be you get the right to vote for a particular pool, which means you get the right to vote on where the incentives go to. The whole point for this is that if you're a protocol looking to bootstrap for your own token on Pendle, you can accumulate VE Pendle and vote for your own pools. So that was the whole thing that started the curve wars in the first place. Now on Pendle, there are a little bit of difference here. We took inspiration a little bit from the V33 model, which is pools that generate high. If you vote for a pool, you get 80% of the swap fees of that pool. The whole reason why I want to do that is we wanted because there are some assets that generally will not receive any votes. So for example, if you support STETH, I mean Lido is big enough to not care about us, and they're not gonna accumulate VE Pendle to vote for their own pool. So how do we even get liquidity if there are incentives there in the first place if no one's voting for it? So yeah, I mean, I think the VE Theory model kind of solves it. You can see that the deepest liquidity on Pendle are actually GLP, SDI, and STETH, all from protocols that will likely not be interested in voting for their own pools, but just because of the amount of fees that they accumulate, people have been voting for them because voters earn the swap fees of that pool. So yeah, that has been working pretty well for us. So that's the general idea of tokenomics for Pendle. Now, there's then Pendle is kind of like a convex for Pendle, and for people who are not familiar with it, it's basically a wrap version for VE Pendle. So they lock it on your behalf, and the token representing it is Pendle, and then and there's a single-sided staking pool on PenPy, which generates yield by depositing Pendle. And again, Pendle takes in any yield-bearing asset, and then because you can stake Pendle on Magpie, you can take that position and park it on the Pendle and tokenize that yield away.
Interesting.
And then
you
that's
talk,
the asset on
yeah.
Pendle.
That just clicked for me. That's really interesting. It's like
Yeah.
a positive feedback loop almost. It's really cool.
I think I can go a little bit deeper on that, but sidetrack a little.
Yeah, go
away
ahead.
from Magpie. I think what's good here is we can, again, Pendle takes yield-bearing asset, which also means that we can take LP tokens. Now, if you notice our liquidity on Arbitrum, like the Pendle token liquidity on Arbitrum, is mostly on Camelot. And if you notice that it's mostly come from one address, which is our own contract address. How we do it is again, Pendle takes in yield-bearing asset. And we figured that we want to deepen our own Pendle liquidity. And how do we deepen it? We basically need more of these LP tokens in existence. So we figured like, okay, what if we take our own Pendle ETH pools LP tokens and support it on Pendle? And we incentivize that, which means if more people deposit and we vote for our own pool ourselves on Pendle, which means we will say, oh, this pool has high incentives. What does it consist of? Pendle ETH LP tokens. And if you just come in, deposit your funds, there'll be more Pendle ETH LP tokens deposited on Pendle, which also means there are more Pendle ETH LP tokens that are in existence, which in turn is deepen our own token liquidity on Camelot, which is what we've been doing for the Aura pools for the bunch of LSDs back then. Which means that if the LSDs want to LSD liquidity on Balancer, they can park it on Pendle and incentivize that pool on Pendle, which in turn deepen their own LSD liquidity in Aura, which deepens their LSD liquidity on Balancer, which deepens their whole LSD liquidity in general. Deepen your liquidity on Balancer, you don't necessarily have to vote through the Balancer route. You can still go through the Pendle route and achieve the same thing, which is what most protocols have been doing by bribing through PenPy and Equilibria on top of us. Now, I think that's a little bit complex, but the whole point is because we take in yield-bearing asset, the more deposit we have, the more liquidity that you get. And now, what liquidity of what yield-bearing asset that what yield-bearing asset do you want to deepen the liquidity? If it's your own LSD, you can park it on Pendle. If you want to deepen your token liquidity, it's possible as well.
That's interesting. So Pendle really plays a bigger role or I guess will continue to play a bigger role in the whole LSD war narrative than I think, at least than I previously thought.
Yeah, even beyond that, it's not necessarily LSD, even like your own pool tools, like your own token liquidity. If you're just looking to deepen your own liquidity instead of like going through the whole curve war, why not just take your curve tokens and vote it through Pendle and incentivize it through Pendle? Because any liquidity that flows into Pendle flows back down into the pipeline anyway.
That's interesting. Yeah. And you talk about deepening liquidity. You guys are pretty much almost at all-time highs, around 150 million TVL.
We are at all-time high in ETH terms currently.
That's pretty impressive considering how rotational and slow the market has been lately. You've launched on a few extra chains. Which ones do you think are the most exciting, that you're kind of preparing for the most? How have the connections been with these other chains? I think Optimism, BNB. Yeah.
I think they've been pretty good. They've been pretty supportive. But I would say just because of the vibrance of the ecosystem, ETH and Arbitrum are still the most fun to trade yield in, just because of the vibrance of the ecosystem and how much nonsense you can do on these chains. It's pretty fun. Yeah. So these two chains have been the most our most active chains for now. But we're chain agnostic. I mean, our whole protocol, even the even VE Pendle is cross chain compatible, which means that which also means that if you vote for a pool on other chain, you still receive the swap fee of that chain, and you can also our incentive can still be channeled into that chain. Basically, the whole Pendle is chain agnostic. So yeah, if there's any chain that is having a vibrant ecosystem, we're definitely open to just hop on it.
Any new ones you guys have planned upcoming? that you
We
wanna-
were part of the mental grant recipient, but I
Oh,
think
nice.
the liquidity in mental is still pretty shallow, and they don't have STETH over there yet. So there's not too much yield bearing assets that we can support just yet. So we are waiting in the sidelines. But yeah, I think we're on the major. I would say most of the major chains already, like Ethereum, Optimism, BNB Chain, and Arbitrum. So yeah, I
Yeah,
would
what are
say
some
that
of the goals that you want to hit, TVL wise, on each chain? What are you most
there's
excited about?
there's no hard set number over here. I think PMF wise we'll see, like, I honestly I don't even know what the PMF is gonna look like, but
Trillions?
how the end game of Pendle is gonna be, I think we joke around internally a little bit, but I think we're quite serious in it, is if, let's say, JP Morgan uses Pendle to tokenize their bonds, for example. I think that will make that will be like kind of like the final form of Pendle, is when we are able to tokenize, because we're tokenizing any kind of yield bearing asset as long as it can be tokenized. So if you can tokenize, I don't know, your corporate bonds on chain, we can do it. And if we are the main facilitator for tokenizing these yields and trading these yields, that's kind of like a no-brainer end game, in my opinion. So yeah, kind of like the end goal would be, I don't know, the Fed using Pendle to tokenize their T-bills, I guess.
Yeah, that's I mean, we didn't even touch base at all on like RWAs throughout this whole thing, but I think that
Yeah.
is like another super relevant topic that we could probably have a whole other episode on. Unfortunately, we've got about 2 minutes here left. I had one last question that like I've personally wondered about, and then we'll give you a second in case you have any like closing remarks. I was wondering about capital efficiency for Pendle. Because at least the pools that I've messed around in, I haven't seen too much volume relative to the liquidity in there. I'm wondering, like, and like you said, the volume generally like oscillates and is sporadic depending on a given event. Have you guys seen instances where the capital efficiency has been really tested of a given pool? And do you have an idea of like whether or not that's something that will need to be worked on in the future?
Yes, it's a big question actually. Okay, so first of all, I'm going to two parts. First of all, how capital efficient our AMM is for now, and second is how we're gonna deal with large orders on Pendle, which I think ties into your question as well. First one, Pendle is running on a concentrated liquidity model ish. It's similar to Curve, where the price of an asset is pegged into a certain price range. So, for example, 1.01 to 0.99 of a price range. For Pendle, we're kind of the same thing, but it's in yield terms. So the thing is, the yield of an asset is more predictable than the price of an asset. So for example, for Curve, it's like that a stable coin is going to be around $1, and that different LSD is going to trade around 1 ETH. So you can concentrate liquidity there. Yield percentage, the same thing. We know that STETH yield is not going to be 20% for like a week. So there's no point having an AMM that supports that. So you can concentrate liquidity into a certain yield range. Now, what will STETH yield be? I don't know, maybe 2 to 7% conservative range, right? So we can concentrate liquidity into this yield range, and then our liquidity is concentrated there. So you notice that pools with generally less volatile yield have more concentrated liquidity on Pendle. And that parameter of yield range is set when you create the pools on Pendle. It's going to be permissionless. It's already permissionless actually, but it's not really just permissionless on the UI front. But the point is, when you create a pool, you can set these parameters where you think this yield range is going to be and constrain liquidity there. The tighter it is, the more constrained it is. So when it's like, for example, GLP, when it's more volatile to like 30%, sometimes now it's 3%, it's less concentrated. So that's the first one. You can constrain liquidity already on Pendle. Now, regarding trading efficiency, the problem is that we can't support yield trading size of a very big size, like an institution would want. Like, for example, their entry size would be like, I don't know, 500K per ticket. Their ticket size is 500K. So that's not possible on Pendle. So one thing that we are building, which also ties in our closing statement, probably one of the things that we are very highly anticipating, is building a limit order system where different parties, usually for example, you're comfortable in buying yield at this percentage and you don't want to check the AMM every single day and where the yield's going to be. You can just put a limit order there, which I think the limit order is going to take in orders that are outside the AMM as well. So if someone else an order that can fill in your limit order without going through the AMM, we'll basically RFQ that as well. So yeah, that's one thing. Liquid, those are bigger trade sizes.
Okay. And that, I think it sounds like that's a pretty good segue into, like, I guess, what you guys are expecting to come next, what you want to come next. It would be good to just get like some closing remarks from you, kind of like what our audience can expect, any like calls to action for them maybe.
I think, yeah, in terms of call to action, just look at the apps. Just visit app.pendle Finance. If you don't understand how the trade interface works, just go to the earn page. I think it's very clear how everything works. You don't really have to know how the protocol works. Well, again, it's DYOR. Look into the docs if you are curious on how things work. But if you just go to the earn page, it's pretty clear on what you can do already on Pendle. So yeah, take action over there. But in terms of what you can expect from Pendle, expect more institution flow on Pendle, because that's one of our key focus right now. Just focusing on institutions. And yeah, one thing I would like to highlight is like Pendle earns already on OKX wallet back then. So OKX wallet actually have integrated with Pendle earn to get fixed yield for their users. And BitGet wallet just announced that they're using Pendle earn to provide yield for BitGet wallet users as well. And we're integrating with more of these wallet. Actually, if you guys know anyone that are looking to, find sources for fixed yield, I think Pendle's the way.
Yeah, it makes sense. I like the comparison you made with the whole Celsius and Gemini thing. If they were using something like Pendle, they would have had a better yield for their customers. So it'll be interesting to see like when and if the cycle and institutions come back, what products they'll choose to use. Anything that we haven't touched on that you want to mention? I know you mentioned some technicalities.
I think things pretty clear. But I'm pretty surprised that we went through pretty in-depth questions on how things work. I generally don't really get that asked the question that much, so I only get to talk about it with the team. But yeah, everything's pretty refreshing to get to talk about things in depth with external parties here.
You explain it pretty well. I think it's very impressive seeing a lot of we've had a few people on the growth side, and every time it just impresses me the level of in-depth understanding of like every aspect of the protocol. So I'm super impressed.
I think we kind of have to.
Yeah, and I think I'm gonna attempt a yield trade. Do you have any open ones? Anything?
I got a good one just from. I didn't realize HLP was on Pendle until this call. So I think you could probably just, given HMX is smaller than GMX2, you could probably just keep an eye on that. I don't know if they roll over on Wednesdays as well, but whatever day they readjust, you could probably have a decent idea of what trader performance has been like. You could probably, I'm sure there's a way to see exactly what it is on chain, and you could easily trade based off of that.
I was just looking into the SDI pools. That'll be my suggestion. Or SDI pools on ETH. And if you know how to predict if you think the maker is not gonna drop that yield anytime soon, I think YT is a pretty decent buy. NFA though, but yeah, YT I think is looking pretty decent because it's priced at pretty cheap. If you think they're not gonna drop the yield below 5%, yes, it's on you.
Sounds pretty
Interesting.
confident.
I'll give it a go. Appreciate you appreciate you coming on. This is a great end to the season. You did a great job explaining Pendle.
Thanks for having me.
Ali's been berating me to own some Pendle, so I think I've been convinced. So appreciate it.
Yeah, that's good. It's been a pretty good session.
Thanks, Dan.
That's episode 38. Thanks for everybody who joined.